Hi traders! Despite all the FUD around the stock indices, longer-term technical observations are revealing in most cases a sort of pause in the main trend. When we look at the charts of the DAX, as we will today, we still lack confirmation to consider the index to be at the end of what would be considered the phase of public participation and ready to enter a phase of panic, to borrow two terms from Charles Dow theory. Other major indices, especially in the US, are showing additional weaknesses, but when we look at them in euro terms, for instance, or sterling, not to mention emerging market currencies, then we understand that from the point of view of global investors, those recent cracks in stocks are nothing else than marginal weaknesses, and therefore an opportunity to accumulate. Stay tuned because we will look at the DAX and we'll go straight to the point. What are the levels that are containing the price right now? Where could we trade breakouts and pullbacks? What immediate targets do we see on the charts? And finally, what are the risks involved? Let's jump in. We start by looking at the monthly logarithmic chart of the DAX, and we see where we are, just here around a small rounding top. Within this big ascending channel, we are trading on the lower half of it. So, but we have been trading there for since the crack here in 2009. There have been some instances where the index tried to reach higher, but it couldn't hurdle really this interim line earlier this year or at the end of last year. And so we are tumbling a little bit down. From this perspective, we could consider that we are just retracing within normal retracement parameters, as we see from this historical evolution. I like to look at the logarithmic charts for several reasons. One is that we can extract those dynamic lines from very early on, when the price was trading in the low numbers, like the DAX sub 1,000, for example, and we can extrapolate those angles and keep using them as the chart progresses into very high numbers, and we see that the market still reacts to those same angles. That is, the qualities of the movements it showed in the beginning is still the same as it progresses years and decades later. I also like using logarithmic charts, especially in those markets when we don't have a lot of history, when we are discovering new prices, like in the crypto space, for instance, where we have assets with a very short history, and using logarithmic charts and using this parallel channel work is a way to infer into the future what are the areas where this price could trade, and not only the areas but specifically the levels where it could stumble against something, some kind of resistance of support, and the areas between those lines that serve as gaps, as acceleration areas where the price can move faster from one level to another. And then there is also a qualitative thing to this using of the use of dynamic lines, and this refers to the point of origin of the line, or the points where the line went through. And by looking at the episodes that define those points in the chart where you place the line, by looking at those macro events that happened at that point in time, you can also embed that line with that quality. Okay, so a line that goes from one major high, for instance, to break that line is a significant victory, as was the case here. But by losing that line, this is a negative occurrence for that particular market. And when the market can recover then in a longer term channel line and recover back to hurdle that line again, a line that came from that top, then a new victory can be announced, and the market is probably going to hit the horizontal, the nominal price that was lost before losing that dynamic line. Okay, so this is more or less the situation. So let's go deeper here into the weekly chart. We don't want to spend too much here on the monthly. We see a new line emerging here. These are steeper angles that do not emerge on the monthly chart, and here we already see how this slightly steeper down sloping channel here emerge, and we are trading within that area, this triangular area where the market seemed to going to be trapped into the near future, but it could hurdle, or in that case it lost that support here and is now trading towards most probably the bottom of this new blue channel here. Okay, now the interesting thing when using channel lines is the fact that by using a line that, or an angle that was effective in the past, we can also place those lines at points where we only have one contact point, like the all-time high here in the DAX, slightly above 16,000. We place the line there, let the line go down here, forming the resistance of that descending channel, and then we look for an episode of volatility, something that changed the picture of the chart structure or the technical picture, and we have this reaction here, this fast reaction, and also we have here a slight break up in the price, so we can place the line here, the line that will have a role as support for this descending channel. And by then we have organized the area where the price could, in case of a downward movement, where the price could be contained within this channel. Obviously, the break or losing a steeper channel, break below a descending line, is a negative signal, is a signal that the market is accelerating down, and then it could then in those cases we will then look for the next immediate support that makes sense before we lost that broken line, right? So this blue line, for example, this blue line will be probably taken by some buyers, more aggressive buyers that, or short-term buyers, I should say, that bought the index down here. But notice how, let me zoom a little bit, by buying at this level, which horizontally also corresponds to a little gap here in the price. So we have a confluence of levels here between this diagonal and the horizontal, making this a strong attractor. Buyers stepped in, but they couldn't really bring the price to new highs or even break above this potential channel here. So the next time the market stumbles upon this line, most probably buyers wouldn't be that enthusiastic, because the last time they bought at this line, they couldn't bring the index to new highs. So especially longer term oriented buyers will not step in here for the second time. They would prefer to go for the next available level. What's the next available level for the DAX? So we have to look at the lines that are being lost as we speak. So as we speak, we are losing this descending line, almost flat here on the weekly chart, that corresponds to this point here in February, March. It was February 2020, before this plunge, this pandemic-induced plunge in most stock indices, and then later on we had the March recovery. But the line here that we are just breaking here to the downside comes back from this level, a level that was easily recovered, not easily, but was recovered quite quickly here within the same year, but by November we stumbled against the line, and by December we were breaking out. By breaking out above this line, the market was telling, I'm ready to go for new highs. So it tried to reach the next level here. Okay, so this time we are losing this line, and as such, when we lose that line, we'll probably think of the episode that happened when we lost the last time we lost that line. Okay, we couldn't surpass that line. The market stumbled all the way down to this longer term support. So that is what can happen here if we lose here confidence in or buyers especially in buying this falling knife. As we see this market accelerating down, they might retreat and wait for the index down here. We also have another line here, the line corresponding to this breakout and pullback. This could be a line that markets might try to use as a bottom before reaching this bottom. We could see also on a monthly chart eventually a body of a monthly candle stopping here, and then the wick going down to pick the demand here at the long-term support. Interestingly, we have this line that we were speaking. If we place this line here, if we place that the blue line, this other support here, then we get a series of intersections here, a triple intersection, almost a intersection of 4 lines. If we take this red line, if we take the red line a little bit lower towards this point here on the chart, and also this little breakout and pullback, we are slightly below it. If we put it on the bodies here, we are almost at the level. So this is almost a confluence of 4 levels, hinting here April 23. So it could be that we trade within this channel down here to until 23, and from then on we can see the market recovering the upper channel resistance, or simply using this broken level here as a resistance and continue tumbling down until spring next year to find this level, and from there eventually then trading up here, conquering new areas. We see a nice confluence here in August, so it could be a point. We could have the breakout before, then pulling back on the intersection, and then going for this other line, this green, less steeper line. Being less steep is easier to break. The most significant level will be the nominal level that has been abandoned here with this rounded top that we are reversing right now. And from there, if the market has enough strength, it will probably try to hit this interim line, which by the way is not that strong line. We don't see a very strong rejection of that line here. We see this rounded top, so it could be easily broken to the upside if we see this progressive movement in the DAX. Okay, so let's switch here the chart into an arithmetic and compare a little bit here. Starting on the monthly, we see this interim down sloping lines here. I want you to that you pay attention here to where I place the lines, because sometimes I place the lines accordingly to wicks, sometimes the bodies of the candles. We will understand a little bit these nuances as we go down here, and sometimes we see a little bit of blurred price action as we see here some wicks here, and especially here around this all this formation, we see a lot of wicks and small kind of doji candles breaking the line. we see larger candles staging a kind of false breaks. These false breaks appear to be false on a lower time frame. But as soon as we go into a higher time frame, back to the monthly, we don't see at all these false breaks. Well, we see in this case, maybe we have a close above, and then the next month closes below again. But in many cases, these false breaks are then eroded, or the possibility of labeling them as a false break comes down, as we see that the bodies of the higher time frame do not cross that line. So it's a simply trick to see if the line is well placed or not. So on the weekly chart, we have also here some intersections coming up. Here, the next immediate support corresponds to this descending line. We have an intersection here for December, so the market could be trading within this area. We have another interesting intersection coming from this level, which we spoke about earlier on the other chart. Simply on the other chart, the inclination of this level was slightly different, was flatter, and this is the line that we are breaking now. In the arithmetic chart, on the arithmetic chart, this line is not the line that we are breaking right now. We are just breaking here an horizontal support line, and the line that we spoke goes down here to the 10,400s, more or less, where it intersects with this horizontal line here that goes back to this point. I anchored this line here because I like this this breakout here from this descending level and this huge acceleration. Okay, this huge acceleration not only confirmed the importance of the angle that we kept using into the future, but it also confirmed that this horizontal level made sense. The level was then later on just erased here through this episode. When the market tumbled, it went to look for much lower levels. But then on the way up, we see that the market created a small base here, reestablishing that line. So this horizontal line in combination with this descending, more or less 10,400, could be an attractor here for the DAX in the coming months. So we could see a continuation at least to the immediate support. We could see a pullback and then acceleration towards this level, or we should simply pause here at this level and then recapture the channel's interim line before going and recapture this descending line from the all-time high. And then we have the nominal horizontal resistance that once this line is broken, the market will try to achieve. So these are different phases of this progression that could be traded with these descending lines. Always when we trade breakout and pullback from these lines, we use the immediate ascending support as a way to place the stops and to trail the stops along to reduce the risk on the trade. And the more levels we have between the entry level and our stop in terms of a combination of horizontal and dynamic levels, so the more confident we can be that in order for that stop order to be hit, more barriers have to be cleared by the price action to hit our stops. So we need some protection when we place our stops. We need some more than one line between the entry and the exit, and preferably we don't want any line to be on the way between our entry level and our target. This is a simple rule, and perhaps more important than the risk to reward ratio, that in itself is also important. And the exercise precisely of using these lines allows you to establish your risk to reward measures. For instance, if you trade this kind of double bottom here, reversal, and we have a comeback here, a revival and the market hurdles this horizontal line, then an entry here with a stop placed below this ascending lines, and a target up here would be in a relation of 2 to 1 or 2.5 to 1%. Okay, so this way the organization of the chart using these lines allows you to establish your risk-reward ratios. And we can go deeper. We can go deeper by going to the daily chart. We see that new lines emerge, always in accordance to the time frame that you are looking at. You look for these lines more or less on the 45% angle, just to organize your trading, right? Because perhaps you are a very short-term oriented trader, so you need to go down and down. And rest assured that these angles that you are seeing here on the daily chart, marked by these white lines, these angles repeat throughout the history. And if you go down into the intraday charts, you see that you can find an angle that keeps repeating throughout the history of that market. So once you have identified that angle, you only need to copy and drag new lines into the future. You don't need to second guess for more lines. There are more lines if you wish. There are endless possibilities, but you only want to organize your chart. So for the organization purposes of the technical landscape, you don't need a myriad of lines or angles. You just need an ascending angle, or the most 2 ascending angles and 2 descending, ascending and descending angles the most for that particular time frame to organize your chart. Because what you need ultimately is you need the gaps between lines. You need this to see where the areas are between the lines, because then you can trade momentum strategies, you can trade trend following strategies in between these levels. And then you need the lines also to place your stop. So you don't need to populate your chart with endless possibilities in terms of angles, because you will cluster the chart too much, and it will be very difficult to organize your trades. We could also go into the intraday, and by going intraday, 8-hour chart in this, we can go in on the 4-hour. Let's go on the 4-hour here, and we see that this descending channel that we have been seeing on the daily chart, the white channel here, appears here immense, and also here we have an angle that seems to be emerging here. Okay, so we organize the chart also with this newly found angle, and by losing, let's say the market is now trapped between these descending lines here, these two pink lines here. Okay, we are almost approaching here the bottom of it. By losing this channel, we are in we can consider it an acceleration, and so a signal that the downward movement will pick steam. And if we, on the other side, if we break above the resistance, this is an early signal that we could be out of it. And then from here, you start trading from one channel to the other. So you have your signal at the breakout. You can use the breakout to breakout and pullbacks and go for the next available channel line on the higher chart. Always looking. In this case, we haven't done any work here to establish a counter ascending angle to organize the chart, but we could look at the pace this market shows on this time frame. Let's say here it looks like it makes sense. Here it makes sense. Here it makes sense. Okay, so we can organize the chart here. Okay, so whenever we try here to make a pause and looking to reverse from this channel, then let's say the market goes a little bit down here towards this line and starts comes up here to the broken level and do something like this, and then it breaks to the upside of the channel. and perhaps a little bit of a throwback here. Immediately when you have this kind of price action, you have this ascending support here, okay, that you can use to trail the stop, targeting the next line, okay. And if you can also use this small entries here to accumulate into the higher picture. Then you go for the next and for the next and for the subsequent level. So you can see the risk to reward on those trades is extremely positive. But I also have to warn you that the lower you go, the lower is the time frame, the more false entries will you experience, so that this very positive risk to reward on the other side increases also the frequency of losses. Okay, the win rate in terms of system performance statistics would decrease. This is a balance always between win rate and other metrics such as the average win and average loss. So, be aware of this fact. Okay, and then we could even go down here to the 1 hour, and also here on the 1 hour we are looking at an angle that keeps repeating, and also here you could find some channel play to use and trade out of this white channel and go for the next one, and so forth and so forth. You see that all the other lines coming from the weekly charts and higher time frames become flatter and flatter. Okay, so it doesn't matter. Yeah, you pay attention to the 45 degree on that angle and use that to organize your trades. So going back here to the bigger picture, and somehow resuming here what we have said so far, there are some short-term opportunities for more aggressive traders, either trading the breakdown or waiting for a throwback before selling. We notice also that in the medium term, spring next year is an attractor, so we could extend this liquidation phase a bit longer without damaging the main trend that is still up in the DAX, and it could only change if we lose the 10,100 as we speak, based on the log chart, and slightly below the 10K on the arithmetic chart. If you are a holder right now, consider and you are considering covering and re-entering at a later stage at a better price, there are chances you could do it. But there are two concerns. One is the fact that the reversal from the all-time high in the DAX is already in the minus 20% range, so half the way of what could be the entire retracement in the following months. If the downside scenarios we have penciled in here on the charts finally materialize, so we are more or less halfway into it. So perhaps you want to you consider it to be too risky. The other concern is the emergence of a false breakout and short squeeze. These short covering episodes tend to happen very fast, and you could end up re-entering at a higher price than the one you got out when you covered, losing some of the compounding effects in the long run. But holders could also use the pointed key support levels to pile in on their long-term positions. Okay, so all right, guys, I hope you enjoyed the video. Consider seriously subscribing to it. You can always unsubscribe if you don't like it, and drop me a comment below, please, if you want me to cover any specific index or stock or a specific technique from the ones we have mentioned here with trend lines or other using indicators and so forth. So that's all I got for you today. Cheers. See you soon.